Kevin Green is with us. We were talking earlier about some of the areas of resistance, that 5,600, 5,700. What are you watching? Good morning, markets correspondent Kevin Green.
Yeah, good morning, Nicole. Yeah, 5,600 is really going to be a key area here. We're right now testing a gap to the upside here. This is after the Liberation Day market sell-off, and we're getting very close to that 50-period moving average on the daily chart, which is sitting at around 56.24 right now. And so right now, the momentum has been to the upside. You are seeing a little bit of market breadth here today. You're seeing a little bit more participation, but we do have a gap that we are trying to fill to the upside, Nicole. And I would look at that 56.24, 56.25 area is the first area of resistance for the market, which is fairly close to that 5,600 level. And if we do have any type of pullback here today, first area that I'm looking at, or this week, first area that I'm looking at is 5,400, be able to hold here. Market breadth, once again, signified by the NYSE advanced decline line here, continues to move to the upside, continues to be in the green. And that MACD is continuing its bullish formation, at least one part of the two-part bullish formation for the MACD, where that 12 EMA is above the 26 EMA. So for now, everything looks pretty good, but you get a little bit nervous once you get to that 50-day moving average. Once you get to that 5,600 level, do you actually start seeing momentum starting to slow down here a little bit? And that could be your signal that maybe some shorts might be coming into the market. On an intraday basis, what I'm looking for to the upside, 5,600 once again, as we kind of talked about, 5,500 is going to be your key area of support. So we're about 40 points away from it right now to the upside. If we come back, we'd like to see some buyers really stepping in. And if we break below 5,500, I'm looking at 54.25. The ranges for today are still going to be fairly wide because the volatility index is still sitting at around 25, 26, and we are still seeing a backwardation within the curve, which just makes which means that we still have some near-term uncertainty that's being priced into the volatility market, and that is something to be mindful of. What is going to be very interesting, Nicole, is obviously we have the earnings. We're going to be talking about that all day, but the economic data this week is definitely going to put us on the trajectory of what we're going to see for this market for the next 2 to 3 weeks, in my opinion here. And I think the biggest risk that you have is going to be on Wednesday. The GDP number is something that obviously it's backward looking. But if you look at the Atlanta Fed GDP now forecast, Nicole, you're looking at a pretty dramatic drop when it comes to GDP for the quarter here. Right now, you have the estimate sitting at around negative 2.2%. Now, if you take out gold from that model, it's still looking at a contraction of negative 0.4% for the quarter. And the reason why I bring this up as a potential risk, if we do see a positive print, which the market does believe that we're going to see a growth of around 0.4% for that quarter here. This would be one of the largest divergences that we've seen from the Atlanta Fed GDP Now model and what we actually print since COVID-19. And I think that could actually be a market mover. Right now, the market's really pricing in positive growth, but if it does come in negative, and we do see that track record of the Atlanta Fed GDP Now still holding up here, I think that probably would be your big potential sell-off catalyst here for this market, excluding any type of earnings announcements where they pull guidance and things of that nature.
So the market moving event could be the difference between what the actual number is versus what the estimate is from the Atlanta Fed or whatever it is. I was focused on the numbers. They are always negative. They are always more negative than what the market really is. And so I certainly wouldn't want to see the GDP print come in anywhere near their estimates. But when you say it could be a market moving event, would it be a good moving event, like the market would take off or at least stay steady if we do come in at least in the positive?
No, I would say, okay, so if the number comes in negative, I think that's your sell-off event. Right now, it looks like the market's pricing in a positive number for GDP.
Right.
The Atlanta Fed GDP now, once we are at this stage, Nicole, actually has a pretty decent track record. You only see them off about 10 basis points, maybe 20 basis points, give or take, at least for the advanced reading. So the model is actually decent. They're usually not too pessimistic when it comes to what we actually print. But when you're looking at this quarter, the reason why I bring it up, you're looking at a divergence of about 2.6% from their modeling compared to what the street's really estimating right now. And that is the event that I think is somebody's wrong. Right? Either the Atlanta Fed model is going to be wrong, which will discount that as significantly moving forward, or the market is way too optimistic as far as the growth for Q1. If you look at the model trends for the Atlanta Fed GDP Now, you tend to say, hey, they for the most part could be right. Even if you give 10 basis points, 20 basis points for their bottom estimate, you're still looking at a contraction of 0.2% for the quarter. That's where you're
Right.
seeing this massive divergence. That's where I think the risk is.
Yeah, understood. And that's why you're seeing many, what was used to be the mags, and we're getting to the mag 7, the crowded trade for the tech, and now you're starting to see some crowds with the shorts on the mag 7. Quick on the volatility index, because I do want to get to the mag 7, but I think you're making a great point, and no one wants to see the negative print, because if you have 2 quarters, that really screams recession. So let's hear what you have to say about the VIX.
Yeah, so volatility right now still sitting at around 25. Once again, given that the potential risk that we have this week, I still think actually volatility is probably a little bit cheap going into these events. And what you want to be able to see, and maybe we do see this, volatility actually stays at around 25, 26, and or we actually see it kind of increase over the next day or 2 days in anticipation for PCE, GDP, as well as the Apple earnings and things of that nature. And then if we actually get an all clear type of an event, that's where you see a massive flush to the downside when it comes to vol. And when I say a massive flush, I'm talking about us actually seeing an 18 handle by the end of this week if everything goes well. But it does appear that volatility is a little bit underpriced. And what I'm looking for today is if we have a scenario where you see volatility up and equity markets up. Right now we have that. Vol up, equity markets up for now. Usually 20% of the time this actually does occur. 80% of the time it does not. And usually that does signify that we have a potential break. And it could be a break in vol, or it could be a break in equities moving lower here as well.
Right. Something's got to give. Let's talk about the Mag 7, because we already heard from Alphabet last week. That was some good news. And you have 4 names this week.
Yeah, so for the Mag 7, I actually have a 3-year weekly chart up here. Obviously, we had a really nice week last week. We had a bullish engulfing candle when you're looking at the MAGS ETF, ticker symbol MAGS here. And what you really want to see is us continuing to break higher. Now, your area of resistance is going to sit around 48.85 for the MAGS ETF. Worst case scenario, what you really do not want to see is actually the right shoulder of a head and shoulders pattern actually being built out here, where we kind of go up, we try to retest that 48 and 85, maybe 49, and then you see a failure to the downside coming back and retesting here. MACD actually is trying to flatten out, looking like we want to be able to have a bull cross. Not sure if that's going to happen this week. We'd have to have a dramatic move in price action to the upside here, but we have the RSI still in this downtrend. We have not broken above that here yet. So once again, we had a really good week last week. You want to see some follow through here this week. We had a bullish engulfing candle, which is bullish when it comes to the MAGs. But what you do not want to see is a stalling out of around that $49 level and then moving lower. That would be that head and shoulders pattern where you have the neckline sitting at 38.80. And that's where you can see a flush to the downside here. So cautiously optimistic when it comes to that. And Nicole, I know that we're finishing up on time here. Keep your eye out on the commodities right now. Natural gas is making some significant moves. We have these outages happening over in Europe to be mindful of. And it does appear that Pakistan, it just actually made some comments there, the defense minister, that they believe that an invasion is imminent from India. So you are seeing some volatility in the commodity space just in general. Keep your eye out on that, because that could be a story later on today.
Boy, that's big. In fact, that's huge. And so we will watch for that. I see nat gas there up over 3%. Very interesting pertaining to Pakistan and India. So we'll watch for that. Thank you for bringing that to our attention. Kevin Green, great to see you on this Monday. Ready for a busy week ahead.